Good morning, trading world. The title of today's pre-market outlook is The Beginning of a Shift in Momentum. Is it time to get ahead of it? Shifts in momentum happen all the time, depending on what time frame you're looking at. On the hourly chart time frame, it happens on pretty much a daily basis. However, it's not until it happens on a 4-hour or above time frame that I get excited. A lot of publications teach you about a shift in momentum as the speed or velocity of price changes in a stock. I like to look at things a little differently. I like to think of things in terms of cycles and swings inside the trend. We all know an uptrend is defined as a series of higher highs and higher lows based on the time frame that you're looking at. The 1-year look back daily chart is currently in an uptrend since October 2023. Market cycles is a very wide term referring to trends and patterns that emerge during different market or business environments. However, specific to what I'm talking about is cycles involving money flow or indicator cycling, the time that it takes an indicator to go from its maximum or overbought to its minimum or oversold. Cycles are made up of multiple swing highs and swing lows and is the basis of which I think of things. In an uptrend that is made up of multiple swing highs and swing low events, there is a rule I like to think about to help in projecting where the market is going. At its most basic instance, in any time frame, an uptrend made up of swing highs and swing lows, if the swing low is not violated or broken, you should expect a new swing high. And just right here on the 30-minute chart, we can see a swing high and swing low. So to highlight it, let's take a look at this swing high and then the swing low that follows. So based on the rule that I like to use when projecting where the market is going, we see a low made here. And this low, I can't use my mouse to find the low of the exact candle, but here we see the low in place where the upswing starts. And so when we get to the swing here, the swing high, we reverse and we make a swing low, but it doesn't break or violate the previous swing low. So from that alone, not every time, but most of the time, from just that, I can expect a new swing high to be put in place. And that's exactly what happens here. We get a new swing high in place. So this is the basis of how I look at everything when it comes to charts. To explain it even further, you have to think of the market time frames as a fractal. Even though I'm looking at a 30-minute chart, because I think of things as a fractal, it has a big impression on the hourly chart ahead of it. So in thinking things of as a fractal, the most Well, to define a fractal in my words, is a fractal is a repetitive shape or pattern at different scales in an object. Now, the most famous example of a fractal that I can think of is a snowflake under a microscope, showing the same pattern or makeup at every magnification. So I look at each time frame in this instance to see if I should expect a new swing high until a swing low is violated. So since we're looking here on the 30-minute chart, then I look out on the hourly and I expect us to continue higher on the hourly. Now, getting back to shifts in momentum, I like to keep up with the number of times the market closes up versus the number of times the market closes down in a certain number of days. So without boring you to death and going into cycles, I'm not going to get specific with the time periods, but most of this is based on cycles that I look at, whether it's indicator cycling or market timing cyclings when it in terms of money flow. When the number of closes down start to outnumber the closes up, I like to start paying attention to swings on the larger time frames and preparing to take contrarian positions. And contrarian just means when everybody's, long and chasing the momentum up, that's when I start to look to go the opposite and getting short. There's a lot more about that back in other pre-markets, because when we're making new highs and ups, I do not like to take there's a certain type of position that I prefer to take, and it's a defined risk position. It's usually in the form of a spread, where I use option spreads to kind of limit the risk and kind of get time on my side, because time is every option's enemy. So you sell spreads in order to get that time on your side. But that's a topic for another conversation later. But during this process, I start to when I start to see this, I start preparing to take contrarian positions. And right now, we are still early in the process where I start to hold most positions either intraday, and if it's held over intraday, it's going to be longer swings, usually in the 6 to 8 week variety, based on the daily chart and its cycles. Now, based on what I just explained, we are possibly at a moment where a swing low may be set on the 4-hour chart, and I'm looking to see if we can make a new swing high, which is starting to seem a little bit unlikely in this cycle. Let me bring up the intraday levels. Okay, now that I have our intraday levels up, based on flow, we should look for a push up into resistance early and possibly fade later in the day. So pre-market, we've already gotten that a good portion of that push up. So we're going to look for that push up to continue. We should probably get us the swing low that may not violate the previous swing low first, which tells us we're going to continue higher, possibly up into our queen resistance level. Let me go through those again. Our jack resistance level is going to be 5104. Queen resistance level is 5111, and king resistance level is 5116. It's possible that we could travel a little higher today, but it's probably only to the 5123 area. On the support side, we have our jack support at 5084, queen support at 5072, and king support at 5067. This 5092 level is kind of where I like to divide the bulls and bears. The more we stay above that 5092, the more the day becomes bullish, or the potential for more bullish activity. The moment we drop below that 5092, the more bears begin to take control. So again, looking for that push up early and then kind of fade, and at some point one of the swing lows gets violated. We're no longer able to make new swing highs, and once that violation happens where that swing low is broken, we get another swing up that's no longer able to push higher, and at that point we can see we could begin to see the bears kind of take control, and we push back below that control line at 5092, and where I look to see another close down for the day. So that's kind of how I see things playing out. And it's just one of those things where we're just in that time frame. We're in the middle of that shift in momentum, and in the overall scheme of things, in the bigger picture, we start to just move sideways. And that's why I don't like to hold normal positions over intraday, and if I do, it's going to be a spread where time is on my side, where I sell premium, so that way, again, time is on my side. So, as I like to say, we'll close each pre-market outlook with what you should remember every day. Your most important job as a trader is to protect the capital you already have. You do this by knowing and understanding the risks you face in each position and in the current market conditions. We manage that risk in accordance with our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.